Welcome back, everyone. We're thrilled to jump into our next session. I'm Russell Burns, analyst here at Finimize, and it's a pleasure to be joined by Anna Fee, founder and CEO at Goodfin, Sudhin Shahani, co-founder and board member at Surf Air Mobility, and Kendrick Nguyen, CEO at Republic. This session, titled Designing Your Next Generation Portfolio, will run as a 30-minute facilitated fireside chat. Anna, Sudhin, Kendrick, it's a pleasure to have you with us today. Welcome to the Modern Investor Summit. Okay, first up, Anna, how do you see AI transforming wealth management and portfolio construction for investors? And how do you expect that to evolve in the future?
Yeah, I think it's a really exciting time right now for AI in wealth and investing. So first, you're already seeing significant impact in what I think is sort of lower hanging fruit and how the world exists today, right? So AI is immediately helping with administrative workflows, operational efficiency. That's helping both advisors and, of course, end consumers indirectly. But I think a really exciting and big unlock for the future is what that means for the consumer. And we'll see a whole new category of products and new behaviors that really have come about because of Gen AI and sort of the way consumers are interacting with, as you can see already, hundreds of millions of people are using ChatGPT, for example. And that will definitely impact, of course, how they relate and invest with money, right? We're already used to doing that on an app. But really the future is doing it through AI. It will be integrated really seamlessly, I think in ways that we can't even fully imagine. So at Goodfin, that's what we're building. I'll give you one quick example. So onboarding, if you think about traditional onboarding before you invest or before you're seeking wealth or financial advice, it's really required a human to do that properly. You would sit down, much like we are now. You might have a Zoom. You would often do it in person. They'd have to ask you a lot of questions about who you are and get to know you in order to be able to advise you accordingly. And that was hard to do effectively with existing technology, but AI has fully unlocked that. So our AI can onboard, someone like you, Russell, or Kendrick, or Sudhin here. Each person would have a very different experience onboarding with the AI because that sequence of questions based on what you're responding is different. And then it's synthesizing and taking that information and instantly and accordingly adapting the response back, right? And so that's like one simple example where you've had a previous human necessitated service that has now become more productized and is hyper scalable through technology. So I think we'll see really interesting applications like that.
Super interesting, thanks. Okay, Kendrick, how do you see the key opportunities and risks when considering investing in private markets and next generation assets?
First of all, Russell, thank you so much for having me. It's really exciting conversation that we're having today. And I think there's a distinct trend in all of the major markets, that is, the EU, the United Kingdom, of course, the United States, and in the Middle East and Asia, of investors, both institutional and retail, moving towards more and more private markets and alts. And that comes with, obviously the potential of an outsized return compared to the public equity market, but it comes with tremendous risks. Now, these risks, it's just about awareness and navigating them. This is nothing to stay clear from, but I think three things that comes to mind. The private markets, whether you invest in pre-IPO, much less in very early stage of Series A or seed, comes with a tremendously higher risk of loss of capital. Yes, there's that possibility that if you put in, 100 sterlings in early stage for what will be the next Uber or Airbnb, that you're going to see 1,000x multiple, but it's much, much, much more likely that you're going to lose all of the capital that you deploy into early stage investing. So just know that the risk of loss of capital, partial or total, is going to be that much higher. I think is one that doesn't matter how often you say it to a new retail, particularly the non-accredited, perhaps not having been investing in the venture capital space, that they don't fully realize that even the best of investors, we're talking about 316G, that probably half of their investments returns zero. That is complete loss of capital, and maybe one or two out of a portfolio of 10 plus investments that's going to see like the 20x, the 50x, or the 100x return. So that's one. I think the second one, we have to obviously in 2025 and heading into 2026, hard to believe, crypto, digital assets, digitized securities. I think that's on most people's mind, and it comes with my second bucket of risk area, which is regulatory risks. And in these new asset classes, the regulatory environment in one particular country may change overnight, and we have seen it here in the United States with the new administration. It can make things compliant one day, and it may have much more restriction the next day, and that means less liquidity, less tradability. So that regulatory risk, particularly for family offices and professional investors, that's something to keep in mind as well. I think the third one is the one that is the hardest to navigate for, in my humble opinion, and that is with the frothiness and the trends towards these alt and private market investment opportunities, which are often harder to get. It's much harder to find, for example, private shares in Neuralink or XAI or SpaceX than buying a share of Tesla. With that comes an entire host of broker dealers, investment managers who purport to sell and make available these opportunities. And I think navigating, assessing which of these players are legitimate. You call them, I mean, this is just operational due diligence or counterparty due diligence. This bucket of counterparty risk, who are you dealing with exactly? Are they credible? Do they have what they sell? Are they going to be in business 2 years from now? Because your private investment is not going to be liquid for a while. These are things that an institutional investor are naturally more equipped and more experienced to assess. A retail investor is going to be very difficult, and combining with whatever trend or demand in the market. And that we're in a frothy market. When I was in London, and the Uber driver was giving me crypto investment tips, and these kind of things, just make people, feel more reactive, and I think that last bucket of risk is perhaps, in my view, something that people should be vigilant about and top of mind across the three main areas. But there are quite a few more, but I think for the purpose of the conversation, those are the three main ones.
Perfect. Thanks very much. Okay, Sudhin, how do you see AI impacting the development of technology in the real world, and what are the main barriers to success?
Thanks, Russell. It's an interesting question. I think that we're at a point where, as kind of the massive growth of AI has been happening, about a year and a half ago, there was, I think, this general worry amongst sort of the investor community who are investing in new vertical AI products that, the foundational models, the GPTs and the Geminis and so on, were just going to be the solution to everything. And I think we're now realizing that that's actually not going to happen anytime soon. And while they're a great solution to kind of day-to-day functions, they're not a great solution for high-value kind of industrial level problems. You think about it as like you have GPT as being like the really eloquent, really well, sort of a very eloquent, sort of great college intern that then needs a lot of data and a lot of training into specific areas to succeed. So I think that's you're seeing actually as the situation where in various industries, whoever is considered kind of the industry experts or traditional businesses and industry experts or teams from traditional businesses with deep industry experience are coming up as the trainers and kind of the verticalizing of those solutions. And also there's the need for very specific kind of high value data sources to make things like that work. So I would say those are the main barriers to success that I see, is like, how do you not just be a generic, like a wrapper or something to a foundational model, is that you need deep experience and a wealth of data, ideally proprietary data, to make your solution work.
Yeah, excellent. Thanks for that. Okay, let's move on. Anna, how can you use AI, or do you use AI to help improve investment returns?
Yeah, I think the key for thinking about that is really the information and sort of the analysis that it can potentially unlock for someone. And of course, how that sort of impacts and is applied depends on the profile of the investor and how they're using that information. But again, just to give you an example from our end, we focus on high growth private tech company investments on our platform. And, as Kendrick mentioned, sort of information and understanding about these types of companies and of course, the market generally is just harder, right? Private markets versus public markets. There's lack of information. You need data. As Sudhin has mentioned, it's so critical to being able to assess these opportunities. Of course, we're working with the right partners and the managers and all of that is super important. But to feel empowered as an individual investor looking at these sorts of opportunities, which many of our users are, information can be that, right? But there's so much information out there. Like if I think of what the internet has done in the last revolution, it's great that it's all out there for us. And there's increasingly ever more information of questionable quality, probably because now it's easier than ever to sort of dump a lot of AI generated content. So using AI in a useful and effective way to synthesize and analyze that information, to curate and vet those sources, and be able to distill it in a way that is effective and useful for that particular investor is power. And that's what we strive to do. And so if you are able to generate a due diligence report or a company research report that's akin to a team of people working a week to put that together, and you can do that in 5 minutes, that's incredible, power synthesis of information. For the type of investor that is looking to do that, is spending the time to, of course, do that. Of course, it might be 5 minutes to read that report instead of sort of an immeasurable number of hours to put it together themselves. But I think that's where the huge unlock is. It's providing the right information at the right time in the right format, which is just really difficult to do without a lot of resources or the power of this kind of technology.
Excellent, thanks. Okay, Kendrick, excuse me. What are the top risks retail investors face when navigating crowdfunding platforms and deals in private markets? I know you've touched on a bit of this already, but still, I think there's more to say. Yeah.
Thank you, Russell, and it's related to what Anna has just shared, and I think there's so much collaboration, for example, that we see with Goodfin on the functionality that AI can deliver in helping less experienced investor. And when you're talking about crowdfunding or equity crowdfunding, you're talking about everyday folks, not just mass affluent, but it may be a college student looking to deploy the first 30 or $50 or sterlings into a private investment opportunities, and she may be new to analyzing, assessing, distilling the wealth of information out there. So informational assessment and diligence certainly is an area of risk, and I think that's where AI can be tremendously helpful. But I would say that one of the less known or less appreciated risks for retail investors, it's just the illiquidity. By and large, the earlier the company, as far as a potential company that someone is looking to invest into, the less liquid that it is. Even pre-IPO, that the secondary market is quite thin, and that's something that we're actually actively working to resolve. The Republic Europe operation has a pretty active secondary trading platform, but if you're going to put in money, particularly a significant and meaningful sum, expect for it to be illiquid, even if the investment is going to be performing very well. And I think these are, again, the wealth of information is available online. We live in an era whereby information, there's a surplus of it and access of it. How to then distill this fire hose of information into something that is suitable based on an individual's own subjective know-how, expertise, ranging from not at all to very experienced in biotech, but may not be experienced in blockchain, and be able to rapidly and make informed decision. I think that's I'm excited about the world ahead, but that remains to be a challenge from what we can tell for retail investor, particularly those on crowdfunding platforms, including ours.
Cool, thanks. Okay, maybe Anna, what best practices would you recommend for balancing exposure between traditional, alternative, and experiential investments?
Yeah, to piggyback on a lot of what's already been said here and what Kendrick has said about the risks of alts and private markets, I think that kind of understanding is really important. We just had Thanksgiving here in the US, and an analogy I often use is like a big meal, right? And there's lots of elements of that meal, and you've got your main course. And for most people, even very sophisticated, affluent investors, most of that is probably in liquid, more traditional investments, right? Stocks, bonds, index funds, and the like. And then you can think of your sides and your dessert and maybe your glass of champagne is sort of what can be supplemented and added, probably after you've got your core set. And that, I think, of course, can be scaled up or down. It varies a lot based on, of course, like your liquidity needs, your level of comfort with risk, which is absolutely true what Kendrick was saying about just the higher volatility, higher risk, certainly longer horizons and illiquidity of most of these private company investments, even pre-IPO ones. So thinking about all of those elements, I think is key. And this is, again, an area where AI is very helpful because it can help you think through some of those allocation questions. And we see a lot of our users already doing that. I do it myself. And I always say this joke that I didn't know until I started Goodfin, that most founders think diversification means investing in other startups and more startups, and a greater proportion of people in tech, I find, like to invest in tech, and that's totally normal and human and great in a sense, and completely valid. And they might have more of their portfolio in those types of assets, but it might also not occur to that person that they should be considering other things. They might not have the information, again, to go back to the point on where other areas where AI can be helpful, but to think about investing in other types of assets based on these, other factors and criteria. So that kind of complete meal, depending on what you need, is something that I think makes sense, just generally speaking, as a framework.
I like that analogy. I haven't heard that one before. Yeah. Okay, let's move on to Sudhin. How do you see new mobility and sustainable technologies impacting travel?
Yeah, so I think a lot of the investment in new mobility, particularly in our area, say air mobility, is around one kind of big common theme, which is, can you make small planes affordable to a much bigger audience? Can you make sort of small private planes affordable to the masses, if you will? And there have been attempts at this along the way through unique, software advances, through unique business models. I mean, we've been in that space for a while, of kind of finding better utilization models for this. But now there's kind of billions of dollars that have been invested in new vehicles that kind of promise this future of like the Jetsons are coming. You have this, and that's where it needs a lot more software and technological advance as well, as you bring back to AI and so on, because typically the business of kind of smaller aircraft or charter aircraft has been pretty fragmented, kind of for the top 0.1%. There haven't been software platforms at scale. There's not software for like air traffic control for smaller aircraft. There's not software for businesses that better run their operations and various different things like that. And it's a huge opportunity, particularly in the US, where regional travel itself, this area of kind of 50 to 500 miles, isn't as well served as it is in Europe, perhaps. Like, the train systems are not as good, the buses are not as good. But what we do have, which was built really in Eisenhower's time around kind of defense, is there's 5,000 airports in the US, and major airlines only use 200 of them. So there's this whole physical infrastructure that exists, and with all of the new investments happening in vehicles that can bring down operating costs to allow people to use it, there's this real shift that can happen for travelers, where people can get across these short hops, point A to point B, much faster than they ever could before, that we move from the ground up into the air.
Interesting. I didn't know that about the airports. Yeah. So how's your company and others using AI and technological change to disrupt transportation?
Well, so we, to tie back to some of my earlier comments, I mean, we consider ourselves kind of an expert in the space. We operate today what's the largest, what we define in our industry as a Part 135 commuter airline, so an airline of small aircraft, if you will. We flew 500,000 people last year. And we realized that we had to build software tools ourselves to better run our business, because they just didn't exist for our industry. And in doing so, we partnered with Palantir, and we use their Foundry and AIP kind of data infrastructure backend. And we've now got those tools to a point that we realize it's something we can offer to this fast growing industry. As all the new vehicles, electric vehicles come out, a lot more operators need to exist. A lot of the existing ones need to really scale. And what we're doing is essentially aligning everyone in the chain that makes a charter transaction happen: the customer, the operator, the broker, and the owner of the aircraft, and aligning everyone onto one common data platform and giving them all better tools to make the whole transaction more efficient and run their business more efficiently, very simply. So that's an area for us where we play. We want to be kind of the technology picks and shovels of this space as it grows. And we also have our own electrification project, which is kind of more capital efficient and more around modifying existing aircraft types with hybrid and fully electric engines to reduce cost.
Excellent. So, okay, we've talked a lot about the risk so far. What about emerging trends or technologies do you believe offer the best long-term growth for investors? So, yeah, Anna, where are you? What do you think about that one?
So I'll tell you where our members are most interested, and I would say in the last couple of years, it's been heavily in the foundational LLM companies, which I think now we are entering a phase where there's starting to be more excitement and I think potential now with like vertical applications, some of which we're talking about here, certainly applicable in wealth and investing. And so we're still in relatively early days on the sort of vertical layer. And I think that is going to have continued interest and investment in the coming years. So that's very exciting. And then personally, I'm watching a lot around longevity and biotech, AI drug discovery. That's obviously not just super high potential in terms of returns, but impact on humanity. So I think that's a big important area. And then just sectors generally where we continue to see enormous interest, especially with like increasing commercialization of the space economy and talk now of data centers in space and just sort of restrictions on power supply, right? We continue to see interest in space, in defense, not in small part due to geopolitical concerns, I think, as well. And then nuclear energy is actually a one we're seeing a lot of inbound inquiries for, which also makes sense, right? There's going to be this, or there is a new wave of alternative energy, in part, again, driven by the incredible demand for power. And I think we're seeing some exciting opportunities there. We've just had one building micro reactors, for example. So these are all areas that are have intense, I would say, sort of interest at the moment.
Excellent. Okay. And Kendrick, what about you? Where do you see the emerging trends, or where do your clients, customers kind of putting their assets to work?
Russell, is a really interesting question, and I agree with the excitement of the sectors and the trends that Anna just pointed out, and some of which are really new to me or newish. But looking at the retail investor base at large, I think my view is as follows: AI and blockchain tokenization as a technology. I think these two will fundamentally disrupt every industry and sector that I can think of. But the best way, in my view, the same way that I would answer the same question or make recommendation to my cousin or my nieces and nephews in high school right now, is that whatever area of actual personal interest that may be for a retail investor. The world of investment now is that increasingly so, everyone is going to be able to actually participate and invest and own in businesses and verticals that they care about. So go for things that you really are passionate about and begin to find ways to invest and participate in small amount, knowing that over the next 10 years is going to be that much more efficient. And if you do so in an informed fashion, in a diversified fashion, as a component of your overall investment portfolio, that there are things that are liquid and safe. But if you begin to do so, I think that's probably the best long-term growth strategy as applied for any one particular individual. And at the end of the day, you can have a lot more fun doing it than trying to go for the whatever, let's say, for example, nuclear energy. That's an area that I know nothing about, and I'm a pretty experienced investor. But that probably I'm going to defer to an expert, like Anna, to recommend and at one point just allocated investable capital for a third party expert to help deploy. But let's say if I'm interested in music and movies, and there are ways now that you can invest and get revenue sharing, I think that ought to be a personal long-term strategy that I think almost anyone can utilize in the world that we are rapidly adapting to, in the world of private assets becoming available to the general public.
Excellent. Thanks for that. And Sudhin, how do you see it? Obviously, apart from Surfair or with Surfair, yeah.
Yeah, I mean, look, I agree with Anna about there's a moment now where the vertical applications of AI are the ones that are getting more exciting, right? There's been a lot of investment in the foundational models there. The winners have kind of emerged, or there could be a winner within them still, who knows? But I think it's like, from an investment standpoint, I look at various AI related things where it's like, where can you find companies that are, again, deep data advantage, experts in their field, are coming to it, where they can take the foundation that the LLMs have created and add a lot of training and a lot of proprietary data, ideally on top, and with a large product market fit. And there'll be a lot of them. I mean, I think that's not a very narrow group. It's just there's also a lot to wade through to get there.
Okay, great. Anna, you touched on so many broad topics there when we were talking about where to invest. You touched on nuclear, AI, everything else. Do you want to sort of just expand on a couple of those? Do you think ETFs are the way? I don't know. Yeah, I mean, it's just you covered about sort of a lot of sectors anyway. Yeah, you're on mute. Anna, I think you're on mute. Can you hear me? That's a shame on that part there. Okay. I don't really want Kendra. I guess we could talk over her because unfortunately she can't realize that we can't see her. But do you want to have a little go on some of those, on the area that you do know about? Do you know about music? Or is that one that you did know
Yes.
about?
And I think those are areas that are now available. For example, if you go to the Republic Europe platform, you're going to see them. But yes, I mean, they range from revenue sharing to equity investment to debt. But indeed, I think, of course, we're a fintech firm. We're also a crypto financial firm. So that's an area that I spent a lot of time on and that I'm excited about. But I do think that it got to be based on personal interest. Just an adage that the best investments are typically those that you made into products and services that you personally would use. And I still do think that that's a very good approach for retail investor at large, which is, I understand, the audience and the topic of the conversation today.
Excellent. Okay. Sudhin, you got something to sort of add before we sort of wrap it up? You sort of something on investments and what you like?
Look, like I said, just backing people that have been good at what they do for a long time and maybe are now using AI to improve it.
Excellent. That's concise. Good advice. Thanks. Okay. Well, thank you so much. Unfortunately, we lost Anna for a second there for the audio. Sudhin, Kendrick, for sharing those insights. And thank you, audience, for listening. That brings this session to a close, but stay tuned. We'll be back shortly with more great conversations. See you soon.